This is the FFR Trading Market Minute. And again, now this is a monthly candlestick chart of the SPY. Usually we start with the daily chart, but I wanted to give the little bigger picture here because we had hit the 600 target. That was my year-end target. Well, that's been hit. The 610 level that I had up here was a level I had said previously that was the area I would expect that we start to see some selling come in. And so we're getting close. We're around 607 and change right now. If you look at the oscillator here, getting a little bit of divergence. So as the market has continued to move higher, the oscillator's not quite following. So maybe we're starting to, like I said, get up into that 610 level, and maybe we start seeing some slow up of the this up move here, which has been pretty tremendous. Back down to the daily chart here, and you see this is the area where I said last week that we had potentially going to close below, or the RSI would close below its moving average here. And I said if they took the low out, whatever the low on this day was, right, if that low got taken out, which was last Wednesday, that we would probably test the 20-period moving average. We can see that low was not taken out. Instead, the market moved higher. And you see the RSI cross back above its moving average on this day here is where it closed, right? And the tendency is if they take out the high, in this case, if we're above the 20-period moving average, we take out the high here, we will tend to get a run once that crosses back above and that high gets broken, and which we did. We had a nice gap up yesterday, right? Today, we actually did poke a new high, and before we're kind of settling out here right in the middle of the range today. So here's that 610 level here. Again, that's the area I expect that we should start seeing some significant selling coming in. There is a gap to fill now below the market here, so that will be some support, and that will be a downside target initially, then the 20 period below that, and we've got some support lower here. We don't have divergence really here. The oscillator has been following the price here. But we are overbought, and we'll see how we end up today, how the market closes today. Now it's Thursday. If the market closes close to the lows and we get the RSI to cross back below its moving average there, whatever the low ends up being, today, if that low gets taken out tomorrow or Monday, let's say, then there's a good chance that we'll at least retrace and fill this gap back here. Other than that, like I said, 610 is the upside target, I think, before we start seeing any really significant selling coming in. I do have an additional target now above here, and that's going to be the 660 level up here. All right, but that is quite a ways away here, so it's not going to come into play for quite some time. Although the way the market has been moving, it might be a shorter period of time than we think. But by all calculations, whether you look at the Buffett indicator or the Shiller PE ratio developed by Robert Shiller, award-winning economist, if you're looking at something called the Hindenburg Omen, everything by every measure that you can think of is saying the market is historically overvalued here. So if you are long this market, make sure you have your protections in, your stop losses, or you're buying insurance through puts or whatever you're doing. Make sure you have a plan, because when things reverse, as they say, markets take the stairs on the way up, but it takes the elevator on the way down, right? Things can happen fast. And if you don't have a plan in place, you can really, really get hurt. A light week of economic data coming up. Wednesday, we'll have the Consumer Price Index, followed by Thursday's Producer Price Index. Hope that helps. Have a great rest of your trading week, and we'll see you back next week in the FFR Trading Market Minute.